Welcome to FMH Insurecast, a podcast created by Farmers Mutual Hail designed to deliver expertise and insights from trusted FMH team members and industry experts. Each new episode will dive into new products, industry updates, and innovative solutions. Let's get to today's topic.
Hello, everyone, and welcome back to the FMH Insurecast. In today's Insurecast, we are going back to the basics on private crop insurance products, including crop hail, wind, named perils, and endorsements. I'm Ryan Bennis, and I'm here today with regional trainer Laura Held. Welcome to the show.
Hi, Ryan. Thanks for having me.
Yes, absolutely. Laura, go ahead and introduce yourself and tell us a little bit about what you do here at FMH.
All right. So as Ryan mentioned, I'm Laura Held. I am one of the 5 regional trainers that we have on our team here at FMH. My territory is the Southwest region. In my territory, I spend a lot of time in Kansas, Missouri, Nebraska, and Texas as well. My husband Tyson and I live in South Central Iowa. We have a cow-calf operation there, and we raise our nephew Kenrick. We have a couple labs then that round out our family as well. We have to spoil them, of course.
Very nice. Very nice. Well, we're here to talk about private insurance products. That's different than our multi-peril, our federal crop insurance products. And we're calling this a back to the basics on private insurance products. So basically, let's start right there. We obviously know we sell federal crop insurance, but on the private side, what is the difference between the two?
All right, good question. So first off, I will say that the private products are unsubsidized. So that means they're not funded by the government and they're not regulated by the government either. Well, mostly anyways, Ryan. Mm-hmm. And by not being subsidized, that means that the farmer is going to pay 100% of that premium, unlike MPCI, where there's that subsidy with the MPCI products. Also, some states do have rate requirements where others are more of the Wild West.
Yes. I will say I've started recently working in Illinois. Illinois is not in the West, but it is the Wild West when it comes to private insurance products.
Also, with private products, FMH does set the rules and the rates for those products that we offer. We will underwrite those, and then our adjusters, of course, out in the country will adjust those claims as well.
Awesome. What is the difference? I mean, in multi-peril, we talk about multiple perils, so it's supposed to cover everything. But in terms of private insurance products, how are they different? Are they typically a little different than multi-peril policies?
Yep, that's a good question too. Yes, they are. Most of the time, those private products are going to be named perils, meaning that they only cover specific type of losses. And the most common of those that folks are most aware about would be crop hail insurance or wind insurance, for example.
Nice. So let's keep moving. I think as far as our private products, the 2 most popular are crop hail and then wind. And wind is often an endorsement to our crop hail policies. So we're going to spend most of our time talking about those.
Okay.
But why are those considered to be the most popular types of private products?
Well, they're the type of perils, if you will, that we see most often and that can be most devastating to those farmers and their fields out in the countryside.
Awesome. Now, there are a few more, and we should at least mention those up front. But we're, like I said, focusing on crop hail and wind. Tell us a few of the other ones, though, that we have available.
Sure. Some of those popular ones that kind of in my territory that we see are pasture fire, grain fire, replant coverage, as well as not so much in my territory in the Southwest, but that forage winter kill product that we have.
Okay. And we have several more, and we'll touch on some other private products at the end here. But, we have this multi-peril policy. It's supposed to cover us for everything. Why do we still have these private products? What is the value in buying, say, a crop hail policy or a wind policy?
Sure. Well, as you may recall, or maybe you don't know because you're brand new to crop insurance, right? But multi-peril crop insurance or MPCI comes with that deductible in a sense. And when those individuals suffer those significant losses, sometimes that MPCI product may not trigger a loss, even though it may be devastating. There's a lot of different factors that go into that, but that could be why. So when a farmer buys that private product like hail or wind insurance, they can choose to purchase it with no deductible at all. And that's probably the biggest advantage there for a private product.
Nice. I also have heard people mention that an APH, it kind of represents more of an average in terms of what they expect in terms of yield or bushels. But crop, hail, and wind can, without a deductible, can sometimes even reflect losses that are coming off of their potential, some sort of yield that's well above the multi-peril APH. Talk to me about that. And then also, I know others have told me that they like to pair these when they have bought enterprise units.
Sure.
So tell me about those.
Okay. So there are some things that a producer has to consider, of course, when it comes to private products, and talking about the deductible side and how sometimes they outgrow almost a loss if their crop out in the field is better than what their average is.
Right.
Like let's say, for example, their APH is 200 bushels per acre, but the way that crop is looking today in the field, it could be 240 bushel, like maybe their best year ever.
Mm-hmm.
There could be a storm that rolls through, and that producer could still suffer like a 20% loss, may bring them down to their average, but they still may not qualify for that MPCI claim at that time, or that payment, I should say.
Right. And that's still a significant loss, right?
Uh-huh.
A 20% hail loss is pretty impactful, and that's a lot of dollars that just went out the window, and there's no coverage for that under the multi-peril policy.
Mm-hmm.
So.
And then you said something about enterprise units too. So enterprise units, in the training world, we talk about how unit structure really is the foundation for crop insurance and what a big impact it has. Well, enterprise units have become the norm in many places, and for good reason. They're a great value, and it helps reduce that grower's premium. However, there could be farmers that have very large losses on their operation, but because, that loss is in only a part of their unit, their enterprise unit, they may not get an MPCI claim paid off of that because the rest of it did really well, for example.
Yeah. So yeah, really, really good reasons. I mean, there's a ton of value in the multi-peril policy, but it does sometimes not cover you for these spot type of losses. And so really good information there. Walk me through a few of the policy options that farmers have when it comes to hail insurance or wind insurance.
Sure. So the first one out of the gate is full or basic is the plan. That basically is a no deductible insurance option. So if there's a 1% loss, we're going to pay 1% liability on that type of policy.
I like to tell my agents in meetings that that's the policy FMH has been selling since 1893. I don't know if that's actually true or not, but I like to think about it being true that the very first policy that FMH ever sold would have been a full policy, right? It's as traditional as it gets, 1% loss for 1% liability.
Yep. And then there's deductible crop hail policies as well. Those could range between 5 and 30%. Some of them have straight deductibles right out of the gate, or some are disappearing as you have a bigger loss. And then, of course, some do not as well.
Right. And so obviously the difference between those two is going to be price, right?
Yeah.
Deductibles are going to be a little cheaper. The bigger the deductible, the cheaper the rate, right? Companion plans. What are companion plans?
So companion plans have a multiplier effect. So 2 times or 3 times are most popular. They work in conjunction with those MPCI policies as they pay out quicker and have less liability that's required to purchase, right? So that Comp 2 plan or Companion Plan 2, I would pay out full at 55%. And a Comp 3 plan would pay out full at just under 40%. The theory there is that the losses that are greater than 40 or 50% would be covered under their MPCI policy. And so keep in mind that a lot of these crop hail products do depend on region. So that is probably most popular here in Iowa or states that, of course, that border Iowa as well.
Yeah, we talked about that a little bit before we did the show, and I thought about that some more. And I think it's kind of like that happy medium zone. And we'll talk a little bit more about this later in terms of what plan works for each region. But definitely in the East, the Eastern Corn Belt, crop hail is less common and the rates are very cheap. And the further you go west, it becomes quite expensive in some places. Companion plans kind of fall in that sweet spot where the rates are not too cheap and they're not too expensive, and they end up being most popular in areas like that. So Iowa's kind of like the middle ground when it comes to crop hail. All right. And then We have one more production plan. How would you like to tackle production plan today?
Well, that could be a whole episode on its own, Ryan.
Yes.
But very similar to a companion plan, but it pays out even faster. The only drawback to a production plan, though, is that it must show a production loss in conjunction with the adjusted percentage of the loss.
Right.
Again, we could spend a whole podcast on that. So I'll probably keep it high level there for today.
I tried to do a training on production plan yesterday, and it took me about 40 minutes. And I'm still thinking that I left a few people without actually learning about production plan. But it is a somewhat popular plan. I think it's actually probably reduced in popularity a little bit. Rates have probably fallen in line a little bit more on production plan. So it is definitely possible that you've been in crop insurance for 20 or 30 years and you've never heard of production plan. And maybe you've always written full or basic plans, and that's very common out east, whereas production plan has probably in that middle zone. It's had its heyday. It's still around, but definitely the most complicated in all these. So as long as we're doing a basics podcast, we're going to leave it right there.
Right. Yeah. We'll save that for a new topic on a different day.
Right. Okay. So how, Laura, would a farmer apply for these hail coverages? They're not obviously federal products, so they don't have the same deadlines as MPCI. We always think of March 15th as being the deadline to do all of this. But for private products, how are they different, and what are some of the rules we need to know?
All right. So crop hail coverage can be bought at any time. And at the same time, we still highly encourage our producers to buy that when they buy their multi-peril. So 3/15 sales close date, go ahead and put that on. Your private products are on at the same time. It's not going to increase the rate. It doesn't change if you wait longer in the season. You're still going to pay the same price. So take the headache away when you see those hailstorm clouds rolling in, and just get it out of the gate there. The rate, again, doesn't change. And there is an exception, though, for cotton. July 1, that rate does change. So keep that in mind, but I still think it's better to do it right out of the gate.
Right. Yeah. For most crops, you think about it, maybe the growing season's 100 days or so. Might as well have coverage for all 100 days, right? Because you just never know. Okay. So what else do they need to know? Like when their agent is filling out an application, what else does the agent need to know in order to complete that application?
All right. So they need to decide what plan of insurance do they want? What crop hail coverage would they like? How many dollars of liability do they want? Do they want $300, $400? What do they want per acre in coverage? And if they want additional endorsements like wind or that extra harvest expense for corn, they need to let their agent know that as well.
Yeah. And so those wind endorsements, we're going to talk about that here in a second, but those typically have to be bought in conjunction with a hail policy. They're endorsements to the hail policy, and therefore they're not typically, and there's exceptions out there, not typically something you can buy by themselves. I would say recently farmers maybe have become more concerned on corn in particular with wind damage than they have on hail damage. Now that might vary by region as well, but wind has definitely become a peril that's been more prominent in the past 5 or 6 years. So let's talk about wind. How about I just completely took all of your section right there.
Hey, that's all right, Ryan. You make my job easier,
that's
right?
Okay, but there are different types of wind coverages, right? So tell me all of those.
Yep. Okay, so there is green snap or wind, and wind actually includes green snap and also coverage for those unharvestable ears. There's also what we call extra harvest expense, and I think I might have mentioned that earlier, or EHE, as it's often referred to as. This is where that farmer can add extra coverage for losses due to the extra labor and expenses when they have down corn on their farm from a windstorm.
Call that the pain in the butt coverage. Right?
Yes.
You're not actually have maybe lost physical bushels, but you've lost time. You may have had to purchase extra equipment, extra labor, diesel, all those things. That's what extra harvest expense is there for. Okay. Circling back to the application process, you mentioned that you can buy hail at any time. Are there any deadlines, though, for endorsements or anything else out there?
Yep. So there is no deadline for those traditional hail plans, but the wind endorsements and production plans do have a sales close date of June 30th.
Okay. Gotcha. And so wind endorsements being June 30th, I think that's probably the bigger topic. Once again, just get it done early.
Yeah.
By the time we get to June 30th, like you're in the heart of wind season already.
Mm-hmm.
So you might as well tack that on early.
And I mean, if they work with their agent around March 15th for that sales close date and they just get it done out of the gate before they even hit the field planting that crop, they're going to have coverage if they just add it right when they add their multi-peril.
Exactly. There's a lot of plans here we just mentioned, right?
Mm-hmm.
And we're trying to keep this as simple as possible. But if you are new to crop insurance and you're trying to navigate, okay, we have these different plan options, and we mentioned those are just the categories, and then within each of those categories, there's lots of options. How does an agent or a farmer decide which coverage works best for them? And that's a loaded question for you.
It is.
Laura.
Well, I'll start with first. Your agent should come to a training and learn from maybe their sales manager or their trainer. Of course, being in the training world, I have to put a plug in for training, right, Ryan? And as far as what a farmer should look at, make sure they're working with an agent that is a good risk management advisor for them. But primarily some of those questions that they want to ask, the agent would ask the farmer is, what do they think their crop's worth? We talked about APH and how sometimes farmers produce more than what their average is. That's something that they want to take a look at. If they're having a really good year, they want to make sure they have good coverage on that. So what is the crop worth? How much MPCI coverage do they have? Did they buy lower and need more crop hail, or did they buy higher and need less crop hail with their MPCI policy? And then what are they willing to spend? You talked about how rates vary drastically across the Midwest. Hail and wind rates are based on a $100 basis, if you can say.
Mm-hmm.
But for full coverage, we have rates in the Eastern, and you had mentioned how, for example, Ohio, 25 cents per 100. I mean, my farmers in Kansas would be so happy if they could buy rates like that, because out west they can be like $30 per 100 coverage out there.
Right. And that's for full coverage, right? And that's, I think, usually comes as a shock to people if you're used to the hail rates in your area. It's obviously based off history, right? These are not pulled out of a hat. But yeah, you talk about Eastern Colorado or Western Kansas. Those rates can get very, very spendy. With that in mind, though, rates obviously going to drive it. You talked about how much the crop is worth. I can just add a little bit of color here from what I see out there. Generally, the further west you go, because it becomes so expensive. It's obviously a popular option because hail is a popular peril,
Mm-hmm.
but they usually are not buying coverage that represents the full value of the crop. Whereas if you go out east and you might have more full coverage, say in Illinois, Indiana, Ohio, and they might actually be buying $1,200 of coverage for their corn, because that corn crop is worth $1,200. Why not buy $1,200 worth of coverage? It's not that expensive. So that's generally what we see out there. Okay. Let's fast forward. Somebody's bought a hail plan. They have a hail storm. Talk to me about how we handle claims. Some of the basics of claims.
Some of the basics. So adjusters will typically work that claim within or they'll wait to work that claim, I should say, at least 10 days after that hailstorm. That's because sometimes that damage is hidden immediately after the storm, and it can show up later. I remember I went out when I first started here at FMH, and I went with an adjuster to look at a hailstorm claim in Adair County, Iowa. And I was just fascinated by what looked like total destruction. And he was explaining that exact concept to me, how sometimes a crop or the plants can grow out of whatever damage it might have initially.
Hail adjusting, I think we've talked about it sometimes being more of an art than a science. Multi-peril, we count bushels, right? On the hail side, we do have procedures and standards, and so we're not completely pulling numbers out of a hat, but it is a little bit more subjective.
Yep. And we follow those rules that NCIS or the National Crop Insurance Services has put together for other crop insurance companies like us, approved insurance providers. And those losses that we're looking at specifically would be defoliation, bruising, cutoffs, or direct damage to that grain itself.
Nice. Now, sometimes we do even, I guess one thing that's very nice about hail, we have to wait until the end of the season to adjust multi-peril because, again, we're counting bushels. But during season, we can actually finish the adjustment and pay a hail claim during the season most of the time, right? Sometimes we have to defer those claims. And give me an example where we might need to defer a hail adjustment.
So, as I mentioned, a lot of times those damages can't be handled immediately. So if there's bruising on a soybean plant, for example, at the base, that plant could be standing today and tomorrow it could cause it to fall down. Or maybe it ends up being just fine after a while. I think when we were prepping for this, you kind of used the example of that tree getting struck by lightning. It could be fine one day and rebound completely, and then the next day it could just fall over. So kind of similar with the soybean plant in that example.
Exactly. So in those situations where we see a lot of bruising at base of plants or things like that, we might defer those to make sure that we're accounting for all the damage that might show up weeks later, weeks or months later. Okay, so we admittedly have been ignoring an entire category of private products. A lot of them you've heard of us talking about on the podcast before, if you've listened to the Insurecast. But tell me a little bit about some of those private pricing products, those multi-peril private products that we have. And we're sticking to the basics today, so we're not deep diving, but tell me a little bit about those.
Okay. All right. So there is that other category that we have been avoiding, and that is called the banned products. They act more like those MPCI policies, but they're bought in addition to an MPCI policy, essentially to guarantee more dollars, and it helps cover all types of losses, including those revenue or price losses just because of a price drop.
Yeah, exactly. So those obviously have their own rules and regulations. Those have some deadlines that line up more with multi-peril side of things. But again, that's a whole nother podcast.
It is. Do you want me to tell you what they're called?
Yes.
So we have RAMP.
Yes.
We have that helps cover, RAMP covers the top end of those MPCI product losses. Then we also have SCO plus and ECO plus. Supplemental coverage option and enhanced coverage options. These are what we call the plus products, and those cover the individual losses, where SCO and ECO, the multi-peril products, do not cover those individual losses.
Those are my personal favorites. So
no way.
I really, yes, I probably say ECO and SCO like eight times a day. So I get a little tired of it myself, but they're fun to talk about. So okay, let's wrap up here. Let's talk about a few of the highlights here. So I really appreciate you joining me here today. But what are maybe 3 things that you'd like to pull out of here to make sure that listeners remember?
All right. So my first one would be take that crop hail or that private product coverage out from day one with your multi-peril coverage. You can do it all in one step on one application. Do it, think about it, forget it, and be ready for when that hailstorm rolls through your operation. The other thing that I want to point out is there really is no magic bullet to the answer of what's the best coverage. It's really based off of that farmer's expectations when that hailstorm hits and where they're located geographically, right? Because those rates vary so drastically depending on what product they select. And then just a reminder that although those MPCI coverage does cover the same items pretty much, you can still have that claim but not have a loss paid because maybe it wasn't severe enough to trigger that MPCI loss.
Yes. I think the second bullet point might be the most important one. From my experience, where we run into the biggest snags is where a farmer and an agent haven't communicated well enough about how their hail plan works, and the dollars don't add up to what the farmer is expecting. And so missed expectations are definitely probably the biggest violator, the biggest snag we can run into. We literally call sometimes hail policies that can't be settled. We call them snags. But I think that's usually where we can avoid a lot of trouble if the farmer and the agent are in in good communication about how
Mhm.
their hail plant works.
Yeah,
So,
finding that right agent that knows your operation, maybe has even been to your farm and helped you understand and choose the right products.
perfect. Well, thank you again for joining,
Yeah.
Laura. It's been a good time here talking about the basics of private products. And thank you for watching and listening to this episode of the FMH Insurecast. Be sure to subscribe to our YouTube channel for more videos and follow our podcast on all of the popular podcast apps.
All right. Thanks, Ryan.
Thank you all.
You've been listening to FMH Insurecast. We appreciate you joining us today and would like to hear from you. If you have questions about today's topic or an idea to share for an upcoming podcast, you can contact us at fmhpodcast@fmh.com. Thanks for listening. This podcast is intended for information purposes only. See policy provisions, terms, and conditions for details. Products underwritten by Farmers Mutual Hail Insurance Company of Iowa and its affiliates, West Des Moines, Iowa. Farmers Mutual Hail is an equal opportunity provider.